we're joined by Abhishek Pareek, who's the Group Head Finance at Waaree Energies, joining us now. Abhishek, thank you so much for taking out the time and speaking with us. My first question to you is with regards to where the order book stands. Just want to understand that from this 60,000 crore of order book that you have currently, what is the execution timeline looking like? Let's say for 12 to 18 months, how much of the 60,000 will be executed?
Thank you so much for having me on the show. If you look at our order book of 60,000 odd crores, there's a significant jump in the order book compared to last quarter. It was around 47,000 odd crores. So certainly there's a 30% jump in the order book. We also expect this order book to remain resilient because we have been adding capacities. We have been very much focusing on the retail arm as well. In fact, if you see the retail revenues this quarter, we are roughly around 20 odd percent in terms of our retail distribution and retail revenue of the total revenues. Our overseas order book is increasing. If you look at our overseas revenue also, these have been growing both with support from local manufacturing in US as well as exports from India.
Mr. Pareek, very good morning and thanks so much for joining in. It's Puneet this side. In terms of your Capex, what is the plan that you have in the near as well as the medium term?
So our total Capex which is announced is around 25,000 odd crore of Capex to be done over next 2 years of time. And you have been seeing that every quarter there are new capacities which are going live. Like last quarter, we have done around 3 gigawatt worth of new capacity live in solar panels in one of our subsidiary. We also went live with around 1 gigawatt plus capacity in the holding company of solar panels. And 3 gigawatt worth of inverter manufacturing also went live last quarter. There are more capacities which are announced over next 24 months. Our module capacity today is around 23 gigawatt, but over next few quarters, it should be around 28 gigawatt of announced capacity. Similarly, our battery plant, which is under construction, is also expected to go live in next financial year, FY27, with initial capacity of 3.5 and going up to 20 gigawatt over next 2 years of time. Similar is the case with our green hydrogen plants, where 1 gigawatt capacity is expected to go live next year. Inverter is also increasing capacity from 3 gigawatt last year to around 4 gigawatt next financial year. US capacity is again doubling up from 1.6 gigawatts to 3.2 gigawatt, and new acquisition of 1 gigawatt in US will take US capacities to 4 gigawatts. So we are very cognizant of fact that we have to grow organically as well as we have been growing inorganically. And this trend must continue considering the existing Capex plan.
And how will this be funded, Mr. Pareek? Because it's of course a considerable amount that you're looking to invest. Any plans on that?
So if you look at our balance sheet also, we have very healthy cash balances, and our operating revenues and operating profitability every quarter is increasing. And this is a significant number for us to go ahead with our Capex plans. Having said that, we also have banking facilities and long-term debt which is available to avail. However, being a very conservative company, we are not drawn down much of our debt until now. We remain debt-free at net debt level even today. And our internal thresholds for debt to equity ratio is 1:1. Right now, we are even much below than this level. And even at the peak level, we expect this threshold to meet of debt to equity.
Got it. Abhishek, your margins this time have recovered quite a bit at that 25.5% mark. Just want to understand as to what is the normative range of margin that you're looking at this year, and also by FY27, do you think 25% is the new normal for you?
Like this year, we have given a guidance of 5,500 crore to 6,000 crore of EBITDA. We are already standing at around 4,800 crore plus worth of EBITDA delivered till December 2025. So we expect to definitely supersede our EBITDA guidance this year for sure. We also have seen a structural change in our EBITDA margins overall quarter-wise. If you look at last 3 quarters, EBITDA margin have been steady state. This quarter, EBITDA margins had gone up. As we foresee more cell production to go live in terms of 10 gigawatt, which is about to start production in next financial year, this should give us further ability to keep our eye on the margin and keep very healthy margin profiles. In fact, when the new businesses production go live, like battery manufacturing start next year, hydrogen manufacturing starts next year, and transformer capacities are going almost 5x of what it is today. These capacities are expected to really support us on our overall margin management and margin profile.
Mr. Pareek, as we wrap up this conversation, a key one, because a lot of your business is, of course, global as well, and China has announced, expiry of those rebates possibly by Q4 of FY26. How big of a positive impact could you feel that could have on prices across product categories?
So the rebate change or reduction in rebate from China has an impact in a way that the price of panels and other products being imported from China is going up because of that rebate. So certainly there's a momentum in the domestic price also. As long as we are back-to-back booked with our supply chain, we really don't foresee much of an impact in our supply chain. However, realization of price is expected to go up with these increase in the pricing.
Abhishek, thank you so much for giving us those insights and all the best. We look forward to talking to you in Q4 as well. So thank you so much for taking
Thank you
out the
so
time.
much.